So everyone's playing the blame game right now. But here's the real question. Whose fault is it that 1.6 million traders got liquidated in just 24 hours? Let me put this into perspective for you. This was absolutely massive. We're talking about roughly half of all crypto traders. Just gone. Wiped out. And here's what really concerns me. With that many people probably traumatized by this experience, will they even want to come back? Think about it. This event literally drove people away from crypto instead of bringing them in. That doesn't make any sense, right? Actually, wait. It does make sense when you see the bigger picture. They're probably planning to bring retail traders back in right at the end of the cycle. But listen, we're not at the top yet, even though we're dealing with all this chaos. Now, get this. The actual numbers are likely way higher than reported. Binance only reports one liquidation order per second. We're talking millions of traders here. And it gets worse. Initially, they said $19 billion was liquidated. But according to CoinBrew, analysts are warning that the true size of this liquidation event could be up to $400 billion. You heard that right. Not million, billion. $400 billion. Here's why. CoinGlass discovered that Binance's API throttling only captured about 5% of the liquidations during the crash. If that's accurate, we're looking at something 20 times larger than the $19 billion originally reported. Now, before you panic, let me explain how leverage works, because I actually believe that $400 billion number. But here's the thing. Traders didn't actually lose $400 billion from their own pockets. Here's a simple example. Say you've got $100 in your account, and you open a $1,000 position using 10 times leverage. If that position gets liquidated, you only lose your initial $100. The other $900 was the exchange's money.
So yeah, big numbers grab headlines. But the reality isn't quite as dramatic. The actual losses were probably closer to $20 billion, though honestly it could be more when you factor in altcoins that crashed to zero. Remember Terra Luna? Remember those coins that were in the top 10 or 20 that just flash crashed to nothing? Now imagine that happening on a much larger scale. So Binance's co-founder comes out saying users who lost money can request compensation. They covered $283 million in losses after their tokens depegged on Friday. But let's be real, that's not nearly enough. They need to refund billions, because that's how much they made from this. When we shine a light on the truth, exchanges actually start doing something about it. This needs to be billions returned to users. I'm serious. Otherwise, every single one of these exchanges needs to be investigated. Binance CEO Richard Tang says the company will learn from what happened and they're committed to doing better. He says he's truly sorry to everyone who was impacted. But here's the truth. He's not sorry. None of these exchanges are sorry. And I'm going to tell you exactly why. Here's what actually happened. The exchange itself locked out regular users, people like you and me. We got completely shut out, while the insiders, their accounts worked perfectly fine. So picture this. Everything's crashing, retail portfolios are getting liquidated left and right, but somehow the insiders' accounts are working like magic. Convenient, right? And this isn't just Binance. Coinbase did the same thing. This pattern has been repeating for years, since day one. Exchanges mysteriously go down at the exact moment of a flash crash, every single time. Their excuse? Our servers can't handle the volume. Are you kidding me right now? You're making billions and billions of dollars every year and your servers can't handle it? Think about this. No traditional brokerage has this problem. The stock market doesn't have this problem. No other market has this issue except crypto. That should tell you something.
Here's a challenge for you. Next time there's a flash crash, try to buy just $5 worth of crypto on your exchange. I promise you, it won't let you. And this only happens during these crashes when prices are at their lowest. Why? Because they don't want you buying cheap. Meanwhile, their accounts work perfectly fine. That's the problem right there. There needs to be a level playing field. Every single exchange needs to be investigated. And if they don't get investigated, if there's no justice, then karma will catch up with them during the next collapse. Because when that happens, every exchange will go down with it. Now, let's look at the evidence. We're talking about Binance here, but honestly, they're all problematic. Binance just happens to be more blatant about it than Coinbase. How do we know this for sure? Just look at BNB. It's already back to where it was trading before the crash even happened. And here's what's really telling. Every night, they dump Bitcoin and Ethereum, but slowly pump BNB. They're literally leaving a trail of evidence. But here's the silver lining in all of this. It's all on-chain. Everything's recorded on the blockchain, which never sleeps and runs 24/7. Everything is tracked and traced. If they're not caught today, they'll be caught in 2 years. If not 2 years, then 5. If not 5, then 10. Eventually, they will be caught. Zero doubt about it. Why? Because it's on-chain. Never forget that. That should actually help you sleep better at night. So now we've got CZ doing some desperate damage control PR. But everyone who's paying attention knows Binance is responsible for this market crash. And I genuinely believe it's Binance, Wintermute, and all these exchanges working together. This probably traces back to the big players, like BlackRock. Here's the smoking gun. While everything else went to zero, BNB is sitting at the same price it was before the crash. Need any more proof about who orchestrated this?
Let's dive into BNB, because there's a lot of discussion about whether this was all Binance's fault. The chart tells the whole story. Binance Coin, the world's fourth largest cryptocurrency, is up 10% on the day. It's now above the October 10th high that we saw before the massive liquidation event. And here's the worst part. This was driven by whales who shorted ahead of the liquidation. They knew it was coming. The timing around the apparent misunderstanding between China and the US is truly unfortunate. So here's what happened. Whales loaded up on shorts. Trump announces tariffs. Then BNB drops 30% in under 30 minutes. And suddenly, BNB rebounds above the October 10th pre-crash high. How is that even possible? I've been saying this for a while now. BNB is the one coin that's going to keep climbing this cycle until it doesn't. One day, the truth will come out. Why does this keep happening? Because they sell their other assets, like Bitcoin and Ethereum, then funnel that money into BNB. Plus, they manipulate to extract extra liquidity. Even Crypto.com is speaking up. Their CEO says regulators should investigate the exchanges that had the most liquidations in the last 24 hours. And look, I'm not saying Crypto.com is innocent either. Nobody is. He's calling for a thorough review of fairness and practices at any exchange that slowed down or halted trading, which all of them did. Every single one. They paused retail trading. They froze your accounts. You couldn't even buy spot crypto if you wanted to. All of them must be investigated. Donald Trump, if you truly want to create a level playing field, you know what needs to be done. Even though you triggered this dump with the tariff announcement, the CEO is asking important questions. Were trades priced correctly and in line with indexes? What's the setup for trade monitoring and anti-money laundering programs? Are their internal trading teams properly separated from retail? 20 billion in liquidations. Countless users got hurt. The job of regulatory bodies is to protect consumers and ensure market integrity. The truth will come out. Justice will be served. And then there's this. Backpack, which is apparently an all-in-one crypto wallet and exchange, is offering compensation. Want to know what they're giving? 200 KFC meal vouchers to users who experienced significant losses. You can claim them through an official form. At this point, they're just trolling everyone. They made billions and they're offering KFC vouchers as compensation. Are you serious right now? Investigations must happen. And they will. Donald Trump, please do your thing. Now, guess who deposited $700 million to buy the dip right before the crash? Bingo, Wintermute. All of them need to be investigated. Every single one. I genuinely hate every crypto exchange with a passion. These people are frauds. And here's what's interesting.
People are now blaming a stablecoin for causing this crash. But that's not what happened. It was already baked into the charts. This was orchestrated by exchanges and Aladdin, which connects back to BlackRock. So what really happened during the October 11th crypto crash? Let me break it down. Roughly $60 to $90 million worth of USDE, a stablecoin, was dumped on Binance, along with other wrapped coins. They exploited a pricing flaw that valued collateral using Binance's own order book data instead of external oracles. Think about that. They're using their own data instead of a legitimate external data source. This local depegging triggered $500 million to $1 billion in forced liquidations, which then cascaded into everyone else getting liquidated. So they basically sacrificed this USDE coin to cause your liquidation. That's what happened. But here's why I know this explanation is nonsense. It was already showing up in the USTD dominance charts. I can guarantee you this stablecoin story is just the excuse they're trying to use as a cover. This isn't financial advice, but justice will be brought forth. It will happen.
This situation is absolutely crazy, and it gets crazier by the day. So please, be safe out there. Protect yourself, stay informed. Thanks for watching, and I'll see you in the next one.